What to expect in the fall 2023 Toronto real estate market. I'm going to be giving you my analysis, some data, and some anecdotal evidence that we're just, hearing around and hearing from our clients about what we expect to happen in the next few months. Plus, what the markets are also predicting for, where the interest rates will be by the end of the year. And this is all going to be one big jam-packed episode before we head right into the fall market. So make sure you stay tuned. Now, if you are looking for some help on how to navigate this fall market, whether buying, selling, or investing, or just really trying to understand what to do so that protects your family and kind of your assets, you can book a call with me using the link that's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a RE/MAX in the Greater Toronto area on top of making awesome educational real estate content just like this one for you. And we find any of these videos I've been making for the last 6 years helpful in your real estate journey, whether you're buying, selling, or investing, or just kind of trying to get a grasp of what's going on in the real estate market. Make sure you spread the knowledge by smashing the like button and subscribing to the Prime Properties channel, because this helps me get a lot of the information out there so people actually know what is real data as opposed to, just reading headlines, which I personally am guilty of sometimes too, right? Because we need to get a look at the actual data to understand what's going on. So what should we expect in the fall, in this year of 2023? Well, I'm going to be going over 3 topics that are of interest. Sorry, there's a pun there. I'm going to be going over 3 topics that are important. 1 is interest, 2 is inventory, and then the third one being price, right? So let's rock and roll with number 1, what the interest rates are going to be. So we'll be hearing from Bank of Canada next week, Wednesday, I think, on the 6th. And while there is a chance of a rate hike, I just tell over here, it is under 50% according to the market, right? So you can see that by this chart over here. However, as I've been saying for, I would say maybe like a month and a half, maybe 2 months now, about kind of like the headline inflation and kind of the base effect, we're very, very likely going to have higher inflation by the end of the year, just because math. Right? So there may be a good reason for the Bank of Canada sometime in the fall, maybe October, maybe December, when they have that announcement day, to actually increase the interest rates again. Remember, inflation is calculated as an average of the last 12 months. So when you remove the deflationary months that you can see over here that's circled of August 2022 and a very, very low disinflation, meaning very low but still above zero, of September 2022, which is the next 2 months, right? The average will not be any lower because we're just taking those small numbers out. And then don't forget, when you look at the chart over here, we got a deflationary month that's coming up in December, right? So in December 2022, when that bar below zero gets removed and replaced with the bar of December 23, the inflation is going to get bigger, right? And that's why I'm saying the goal of 2 to 3% target inflation rate by the Canada is likely not going to get hit end of this year. So which means chance of rate hikes. Now, this is what the market is forecasting in the next 2 years, leading up to the big scare of negative amortizations that are renewing in 2025 and 2026, right? So it thinks that the overnight rate, so the Bank of Canada, interest rate is going to come down to about 4%. It's like at 5 right now. It may get to 5.25%, which means we may see some mortgage rates in the high 3s and the low 4s, depending on what kind of discount the banks are giving at that time in 2 to 3 years, right? Because remember, they can change that on their whim. Remember, all of these are just market predictions, and the market has been wrong in the past before, but they're probably a little bit more accurate than some of these economists, right? Number 2, inventory. As it stands right now on the last day of August, the active inventory in all of the Greater Toronto area is about 16,200 something, right? Which is a fairly high number. This means that there is a little bit more than 16,000, give or take, homes available that can be purchased right now. Normally, as we head into the fall, I see about like 11,000, maybe 12,000, right? So right now, relatively speaking, about what we normally see, we're like 30% higher than the norm, right? So last year, as we headed into the fall, because I was saying it's very similar, eerie kind of backdrop, we had 13,000. We have 16 now. This means that we're going into the fall market with a bigger glut of inventory, more properties to be bought right now than even last year. So if we have a larger than normal amount of new listings come September, relatively speaking to the amount of active buyers that are in the market looking to buy something, then inventory, the active listings, is going to continue to grow throughout the rest of 2023. Seasonally, again, very normal that we will get a burst of sales, and we also get a burst of new listings in the last 3 weeks of September. And if that burst of sales and listing skews heavier to the listing side than sales, meaning that we get more listings than we get sales, we're very likely going to see prices drop even more than seasonal norm, right? So at the moment right now, nobody, and I'm pretty confident nobody has a crystal ball and can tell you how it's going to look like or how it's going to pan out. But from like speaking with a lot of clients and potential clients in the current market right now and kind of what they're planning to do, I am personally seeing that a lot of investors are choosing to deleverage right now, meaning that a lot of properties going on the market actually have tenants, right? As opposed to more buyers coming on the market looking to buy. I personally also think that if we get a rate pause in September, most buyers may still not want to come back to the market and want to see that like the next rate announcement in October to see a second pause before deciding to come off of the sideline. Like I think the demand is there, but the sentiment isn't there, right? Because sentiment-wise, I think it's because the pause that we had earlier this year, I think in like March or something, was resumed abruptly, and the buyers were like, I don't want to see that happen again. So they want more reassurances, right? So they want to see maybe at least 2 rate pauses before they jump back to market. It's kind of what I've been saying a lot. Once bitten, twice shy. So I don't suspect we'll have that much more demand than the amount of new listings that were coming on the market for those reasons. Now, the other important component that I'm seeing right now is that a lot of the rate holds from the summer that have a 5% in front of it right now will probably be expiring by the end of September. And right now, both the fixed and the variable is in the 6. So that's going to remove a cohort of buyers from the market as well. Now, as for sales, we very, very, very likely could end up with less sales than last year in 2022, even though we had a big burst of like a spring market in 2023. So you can see over here, last year we had about 75,000 sales, which is very low. And year to date, we have about 44,000 versus last year we had 52,000 because January, February, March was very, very strong. So I suspect the total sales are going to drop to decade plus lows. I would say probably in the low 70,000s or so. And the last time we had low 70,000 sales was around 2008. And we all know what happened in 2008. Yeah. Number 3, prices. So based on number 1 and number 2 that I talked about, I suspect prices are going to decline for the rest of 2023. Look, don't get me wrong. There's a very, 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 very good chance the average month price in September, month over a month, when we find that out in like October, right, is going to be higher than in August, because this is usually the biggest jump in prices month over a month, because a lot of the buyers and the sellers and like basically the entire market kind of wakes up from the summer lulls, because August is never indicative of anything, right? And it's also because in the fall market, the larger like multi-million-dollar homes go on sale, which when they do sell, they drag up the average significantly. Especially if the number of homes sold is very small, the big home selling will drag it up more. So historically, the average increase is about like 3.8% month over month from like August to September, right? And even last year when we had super bad sentiment, we got 0.67% increase, which is still, above 0, but very well below the normal 3.8, which is exactly what I suspect is going to happen this year, right? So like I was saying before, I really thought that May average price of like a little bit shy of 1.2, it's like 1.195 or 1.196 will be the highest for the year, right? And I suspect that prices will trend closer to maybe like 1.1 mil by the end of the year with inventory and rates where they are right now or where they're heading in the next few months, right? So the real question that, again, nobody has the answer to is, where will the market be next year and what will it look like? I personally will be watching the rates and the inventory when they compare against each other. If rates are dropping faster than inventory can build up, prices should probably chop sideways like what we saw last year for the last 4 or 5 months, right? Until kind of like affordability, I know big quotes, affordability is improved with better rates. Now, if inventory builds up faster, then the rates could come down in the fall because, sentiment is bad. Price drops are inevitable and they're coming in the future. The question is how rapidly with how much inventory there is. And this is why I really think that fall 2023 in the next few months that's coming is going to be very, very critical especially with the type of a looming recessionary macro backdrop that we're all talking about right now that we think is likely to happen. So I'm going to continue providing my analysis to you as the time comes. And if you are looking for some help on how to navigate this real estate market, whether you think that you need to deleverage a little bit because you're concerned about where the macro backdrop is and you're a little bit scared, or you're thinking that maybe there are some opportunities right now because people are scared, you can book a call with me using the link that's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?